Greetings and a very warm welcome for joining us. I am Nicole Njuguna, and today we have an exciting conversation lined up for you as we talk to the management team of the first and only cross-listed bank at the Nairobi Stock Exchange. Today, we get to talk to the management team of BK Group, Bank of Kigali, as they talk to us along the sidelines of their investor briefing for the year ended 2024. Thank you very much for joining us and a warm welcome. Let me start with you, Dr. Oziel. Tell us about the group structure and how it creates value for the shareholders.
BK Group is a unique ecosystem on our market. It has 5 entities. The largest one is the Bank of Kigali, which offers a wide range of banking services. We have BK General Insurance with all non-life insurance products. We have also BK Tech House, which is our Fintech company, developing various digital solutions for the group, but also for the market. Specifically for education sector, they have developed a school management system, but which allows also parents to pay tuition fees through the bank, which benefit the bank as well. And from that, the bank has developed school fee lending to parents, and the money is paid directly to schools. Another product Tech House has on the market, support outside the group, is the agriculture, agri-tech. It's a system that allows the Ministry of Agriculture to manage the subsidized inputs to farmers. So it has data of all farmers onboarded, and also data on land, the land size, the unique number of the land, all players along the value chain, the agro-dealers, agronomists, importers. So it has now rich data of about 3 million farmers, which also is an asset for financial institution to use when proposing financial product to the farmers. And so we have all payment systems developing in-house and used by our subsidiaries. So we have also BK Capital. They have the MD, Mr. Siongo, and also they have 2 licenses. One is the investment banking, another one is the fund management. So they are growing very well and very fast, and they also working on new products. So lastly, the group has created a foundation, BK Foundation, which is our philanthropic arm, supporting communities, youth, women in specific areas of environment and conservation, entrepreneurship, innovation, and education.
What would you say is the current state of banking and financial inclusion in Rwanda?
The overall financial inclusion is high. We've been conducting a survey every 4 years, a study called the FinScore, since 2008. And the first survey indicated that in 2008, the financial inclusion was around 48%. And the recent one, 2024, indicated that the financial inclusion was 96%. A lot of progress. But this is for overall inclusion, including microfinance, the formal sector, bank and non-bank institutions. When it comes to banking, the population banked is only 22%. Good news for us because it indicates opportunity to grow our banking business activities. And developing different products to address the unbanked population.
And now to you, Madam Anita, CFO BK Group. Please tell us, you have delivered strong growth and sustained top-line growth, enhanced shareholder value across the year. Tell us, what have been the key drivers for growth? And talk to us about this performance as well.
Yes, sure. Yes, so the group registered a profit of 91 billion. It was a growth year on year of around 21.7%. Our performance continues to be driven by mainly the top line. So top line, we're looking at interest income that has grown by around 15%, 16% year on year. And this is off the organic growth in our loan portfolio that last year grew by almost 17%. And the growth that we're seeing in the loan book is still predominantly around the corporate and SME space. They contributed about 50% to the total growth in the loan book. But we're also seeing increased performance in other segments as well, especially retail. The retail segment contributed about 39, almost 40% to the overall growth in the loan book, as well as agribusiness, which also contributed 11%. So that's the main driver behind our performance. It's the organic growth that we're seeing in the loan book, and then of course in non-funded income. Non-funded income we did very well last year, especially on FX related income, where it was a combination of increasing trading volumes while also maintaining or managing the revaluation losses that typically come with running a short net open position. So that effective management also helped us to really beef up our non-funded income. Also on the loan-related fees, which are more the capital-consuming NFI, we also had good growth there, especially in shorter-term loans on post-import facilities and factoring facilities as well. So it was very conducive business environment last year. Another important element to add is on cost containment. We were very efficient. Last year we managed to only at the group level increase our total operating expenses by 2.6%. At the bank specific level, we actually decreased operating expenses year on year by about 1% or so. So this has also helped us to be more efficient and of course manage costs, which then contributes to the bottom line. So those are the three main drivers behind our performance last year.
Switching to tech and digital transformation, tell us about the role and impact of BK Tech House.
The Tech House, which is like the Fintech of the group, plays almost like a dual role internally to support the rest of the subsidiaries, but also externally in the market. So internally, especially how they collaborate with the bank is in terms of product development, especially around the digital space. There are a number of products that we've launched in the past and others that we're working with on, which are again geared towards bridging that gap that we saw in financial inclusion, where now we're looking at this segment that is unbanked, and now how do we access that mass market digitally using digital products. So that's the space that they're mainly helping or collaborating with the bank in. Maybe Dr. Zelius want to come.
Let's talk about the insurance and wealth management subsidiaries, Mr. Siongo. How have they been performing, and what does the future outlook look like?
No, thank you, and that's a good question. In terms of performance, both are doing very well. Both businesses are positioned in very promising sectors. If we look at insurance, the premium penetration rates currently are below 1%, which shows there's a lot of potential for future growth. Looking at the business itself, it started in 2016, and for the last 5 years, it's been the most profitable business in the non-life sector. In 2024, the business was able to generate a profit of 4.3 billion franc. And this is attributable to 3 or 4 things which I'll highlight. I think the first one is innovation. The company has responded to the needs of the country, to the needs of Rwandans, and one such example is in agriculture. They set up an agriculture insurance product 2 years ago, and the insurance business at the moment has a market share of about 51%. Secondly, in terms of the claims ratio, it's one of the lowest in the industry. The business has had a very disciplined approach towards underwriting, and there's this thing in insurance where you may have a low claims ratio because you don't pay claims, but in terms of claims and payments, they're one of the best. And then thirdly, there's been a very disciplined approach around managing cost. On the wealth management side, the unit trust penetration in Rwanda is quite low, although savings has started picking up, and this shows in our performance in terms of the growth of AUMs we've had in our fund management business. Last year, we were able to grow by 76% from 43 billion to 73 billion, and going forward, we expect that that level of high growth is something that can be sustained due to the growing incomes on the back of high GDP over a number of years, and savings really is a priority for the government. If you look at NST2, one of the pillars or one of the goals is to double the savings rate, and we expect a number of initiatives that will come into place that should give that particular business a lot of tailwinds.
Still on you, Mr. Siongo, BK Capital MD. BK Group is the only foreign trust-listed bank on the Nairobi Securities Exchange. What is the value of the listing here?
I'll give that one to Dr. Zio.
So it's a good opportunity for investors in Kenya and East Africa to invest in BK Group and benefit from one of the fastest growing economies in Africa. Rwanda has had an average annual growth of over 7% over more than 20 years. Even recently, in post-COVID period, the average has been above 8%. And so this, combined with the high performance of the group, also we have a track record of high profit, and we see a big opportunity for investors here. So we are happy to be cross-listed in Nairobi, and we hope to continue to attract more investors.
And Dr. Uziel, what should investors at the NSE look out for and expect from BK Group going forward?
No, I think a good question. In terms of value, so the shares of BK Group began trading and were listed on the Nairobi Securities Exchange in 2017 after the rights issue that the group undertook. And there have been multiple benefits. I think the first one is liquidity. A number of shareholders came on board at that point, and currently about a third of the stock that's outstanding for BK Group is on the NSE, and about a third as well of the trading that happens, sometimes even half of the entire group is on the NSE. So I'd say certainly in terms of allowing investors to come in and out, listing here has supported that. Number two is it's raised the profile of the group. For a long time, we were just listed on the Rwanda Stock Exchange, very well known within the country, but listing here in Nairobi has allowed the group to be a lot more known to investors across the world. So I'd say those are the two primary listings, and something that we're excited about, and is the reason that we're here having this interview, and the reason why we're here in Nairobi engaging investors.
And back to you, Mr. Siongo. At Abojani, we run an investment advisory firm with over 300,000, a community of over 300,000 investors. What would you tell them about money management in 2025 and going forward?
Thank you. I think the beauty about money management is that, tips are timeless. what we could share this year would be probably the same thing that will be shared a decade from now or a decade before. Looking at the times we're in, we see what happened to the markets yesterday when Trump announced the tariffs. We saw a drop in US markets, almost as bad as some of the days we saw, let's start again. I'll start. Yeah, so in terms of money management tips in 2025, I would say a lot of what I can share, you already share with your audience. Good tips are timeless. The first one is on diversification. We are in very uncertain times. A lot of the equity markets across the world are at record high valuations. Just yesterday, we saw the risks that are there for equity investors at least, and investors in multiple asset classes. So Trump announced tariffs, and the markets in response had drops that were only seen during COVID times. So I think the importance of diversification now is quite critical. Do not put all your eggs in one basket. And there's a survey that was done a few years ago, and it looked at the richest families in the US at the beginning of the 20th century. And if these families had just invested in a broad basket of listed securities and only spent 2% of their wealth on maintaining their lifestyle, etc., would have 16 more billionaires in the world than we do right now. And then the reason why a lot of this wealth was lost, destroyed along the way was due to bad investments and inflation. And diversification can actually help you protect yourself and protect the money that you've been able to generate against some of these things. I would say that's the first tip. The second one is around education. They say there's no better investment than investing in yourself. So financial literacy, wealth management, all these topics around building wealth and building yourself requires a lot of learning. So I'd encourage your audience to keep learning, keep engaging, because it's a never-ending journey. I've been in the space for a number of years now, but I still read a lot of new content that's relevant to me, that's relevant to the business I manage, and still in that spirit of learning. There are a lot of opportunities to quickly get rich, to quickly make money. I would urge people to take time to do their due diligence, understand what's driving these investments, understand who's behind these investments, how are they making money, because a lot of money has been lost in quick rich schemes, or a lot of money has been lost perhaps in legitimate investments, but that were not suitable to the goals, to the purpose, or to the profile investors have. So I think the only way you can really mitigate against these risks is learning and then doing research. So those would be my top two, but I'm sure these are things that you shared with your audience, so it's just emphasizing.
All right, so 3 key things: diversification, education, and due diligence. And as we come to an end, please give us a parting shot. Let's start with you, Dr. Oziel.
This morning we had a good conversation with our shareholders, both physically and online, and we want to reiterate our commitment to higher returns, because we have strategy in place, we have capacity in place, we know the market. So this year and in the years to come, we are confident that we will continue to enhance our shareholder value and pay a good dividend to our shareholders. So we want to assure our investors to continue to invest with us.
Thank you. Madam Anita, please give us your parting shots.
So this it's going to be a very interesting year for us. Competition has intensified, but we welcome competition, and so for us, we can assure that we'll continue to work very hard on driving the growth that we've seen, as our CEO just said, continuing to be more operationally efficient, and expanding ourselves into territories that maybe we've not previously done so well in the past, just to ensure that we diversify and we grow further. So yeah, interesting year to look forward to.
And finally, last but not least, Mr. Siongo.
In terms of parting shots, I would say beyond BK Group being a good investment, there are a number of very good investments in Rwanda. One of them being, RSE and the stocks within it. Just today we are launching an RSI Total Return Index as BK Capital, and a lot of insights that come from that index. Over the last 3 years on an annualized basis, if you include dividend reinvestment, stocks have grown at 27% year on year. So a lot of exciting investments, opportunities in Rwanda, and I would urge your audience to engage us, engage different intermediaries, and invest in the country.
Thank you.